There's one strategy that I have been using for a while with Forex trading, and it's actually the one that I'm using in order to overcome with the challenge of the funded account for EA funding. So in this specific video, this is what I'm going to show you. But I want you to actually take this training seriously and not just like a Netflix video and just out there just watching it while you're doing something else. No, I want you to really focus on it because this is actually going to change your life forever. So with that being said, let's go ahead and dive right into the video. All right, so the first thing that we actually have to do is to identify the trend. The trend of the market is going to determine the direction of the trades that we're going to end up placing at the end of the day. Now, in order to identify the trend, pretty much you just need to take a look at the actual market. Okay, you're going to identify fundamentally what is the trend of the market. Now, you can do it with the daily, 12 hours, 4 hours, but it will depend on what time frame you're actually going to be trading with. For instance, if you're going to be doing intraday trading, then you shouldn't go with the daily market trend specifically, but mostly 4 hour, 1 hour at the most. Okay, 1 hour, 50 minutes. I think that should be more than enough. But I'm telling you guys this so that you fully understand, like, you can get confused if you actually look at the trend on daily and then 1 hour. For instance, you can see the daily, we have 1 hour in a 1 hour trade, in a 1 hour positions, we actually have a downtrend. Okay. But if you actually go and take a look at the hour position, it looks pretty much like an uptrend. Okay, so you got to be very, very careful with that. Right now, we're gonna take a look at 1 hour candlesticks. So once you actually identify the 1 hour candlesticks, you're gonna have to use two different indicators in order to confirm that trending. And that's pretty much when you're confused about, you don't know what the trend is. So you're gonna be using the 50 EMA and also the 200 EMA. Okay, so with these two indicators, basically what's going to happen is that you're going to be able to identify, yes, the price is going up or is going to go down. Okay, now we're not going to place position only with the trend because there are some opportunities for retraction, but I really want you to take advantage of the retraction with the trend and against the trend. So when you actually use the 50 and 200 EMA, you're going to identify where the price is actually going. For instance, the 200 EMA tells me that this is a downtrend right here, but then it actually became an uptrend because of the 50 EMA. I won't go through the details in regards to the specific moving averages because I do have some videos that actually talk about this a lot. So hopefully you can watch those videos as well. Now, once you actually have identified the trend, you need to actually find the entry points. And in order to find the entry points is actually pretty simple. This is an active trade that I currently have right now. Let me see. This one is another one that I have. Let's go ahead and take a look at GBP JPY. So if I'm actually looking at this uptrend chart right here, basically what I'm looking at is at some resistance and support levels that are happening along the way. For instance, since this is an uptrend, we can see that the price actually right here retracted, but then it dropped back right here up until this level. Now this became a resistance, a support level, I'm sorry. So it became a support level up until this area. You see, it actually broke the resistance level and this became a support line. So this is a good entry point for a buy position. Now, once this new high, this one right here, this one right here is the new resistance level. Once that one asset is actually broken, this becomes a new support line. Now, not all of the times the support line is going to be touched again in order to give us an entry, but we got to be ready for it. All right. A non-entry is better than a bad entry point. Okay. So if you actually notice, the resistance line was not touched, so we couldn't enter this position. Nevertheless, when you actually take a look at my other positions that I actually placed right here, this right here broke again a new resistance, but it never touched. But when you actually take a look at the one that I entered, you can see right here that it broke this resistance level. So then it became a new support level, and that's where I actually entered. Okay, I entered right here. I actually entered slightly higher because I couldn't enter earlier, but it is giving me a 1-to-1 risk reward ratio literally right now. And in order to show you the live trade as well, my funded account, it's literally right here. This is where it is. I'm actually looking at a 15-minute candlesticks, and I already moved my stop loss to a $75 profit. Now, I didn't enter with a big lot in this specific position, but you can see that I made, if I actually win it, I'm going to end up like with a $700. As a matter of fact, I'm not sure if it's going to touch right there. So I'm actually going to move my stop loss slightly higher to this new support line that I actually drew right here. So even if the price starts to retract, then I'm going to win the position with $190. All right. So this is with a Euro, GBP, JPY. Now, how can we identify new trends in this specific same strategy? Let me just go ahead and find one good example that I have. All right. This one right here, you can see that this slight or small uptrend actually gave me the opportunity. Why? Because if you notice, this was a support level that was broken, then it became a resistance level, and it was broken one more time. Since it was broken, this became a new support level. Now, unfortunately, this would have been the perfect time to actually enter, but I wasn't up at that specific time. I mean, this was at 7 a.m. when I entered the position, but this was at night yesterday, but you can see the exact same thing. So take a look at it. Let me just go ahead and modify my brush. This right here, I don't know what's going on with my mouse, probably doesn't work. This would have been a great entry, but it did give me a new entry point right here. So that's why I decided to actually go into it. I don't know how to use this pen. All right. But the point is that you can actually see that I was able to get that entry point pretty darn easy. All right, so I got that buy position right there. Now I'm monitoring right now my own position because I really do wanted to hit the take profit. So I actually drew this trend line in order to understand where the price is actually gonna get break. As a matter of fact, I do think that once it reaches this level right here, probably something is going to happen. Either it's going to break, continue going up, or it's going to break and start going down. Most likely it's actually going to start going down. We're going to see where that one actually takes us. But hopefully you understand like what is the entry point. Now, let's go ahead and talk about the take profit and the stop loss, because this is super, super important for this specific strategy. The first thing that you got to understand in order to identify an uptrend or a downtrend is that there are always going to be high and low levels. All right, super important. So at the time that you actually enter a position, just such as this one right here, you can see that there is right here a new resistance line. So if you actually enter from the low support line, then your take profit should be around your closest resistance level, like it happened right here. This is a 3.36 risk reward ratio trade, which is pretty darn good. As a matter of fact, I have it active right here on NZD USD. So take a look at the actual. I already moved my take profit, my stop loss, I'm sorry, to a higher level. And as a matter of fact, I'm going to move it slightly a little bit more to this brand new support line right here. I don't think that this one is going to drop that much. So even if I lose, if the price drops again, I'm going to make $142. But if I actually end up winning it, it's going to be around $800. So why is it that I actually move my stop loss and so on? Because it's obviously not guaranteed that the price is going to touch that higher level. But you can identify that higher level with different time frames. For instance, the 15-minute, you can see that this is a new resistance level. So I'm thinking, oh, hey, you know what? This might actually jump to that level. Now, why is it that I move my stop loss? Because this resistance was actually broken. So that tells me that it's going to continue all the way to the next resistance level. So once I actually get that hit, I'm going to make a really good amount of money. And this specific position that I actually placed in capital.com, this is my small account. I actually risked a total, I think it was like $10 or something like that, or $15. Now I'm actually targeting to make $48 out of a $400 account. That's actually a 10%, 12, 13% of my balance increase. So that's not bad at all. So when you actually enter the position, there is no certain take profit, but is determined on the next level of resistance or support. Whether you're going up, you're going to look for a new resistance level or above. If you're in a short position, then you actually have to look for the lowest support or the next support line. That's going to be your take profit. Now, when it comes to your stop loss, I do recommend you to actually take a look at different time frames. And if you're going to be trading with 1 hour, you're going to see what is the lowest low that you see. For instance, this baby right here, this is a low. All right, this is a new low. So what happens here is that when I actually entered my position, I saw this low. So my stop loss should be slightly above or below that specific level. Why? Because if it reaches that level one more time, I might lose the position. So slightly below, and you're gonna be safer than if you actually put it to this level right here. You can see that this candlestick reached all this level, but this one actually stayed right here. If I would have actually placed my stop loss around this level, it would have been hit and I would have missed this opportunity. So hopefully as well, that makes sense. Now, I do want to tell you what entries you guys should avoid. What entries you guys should avoid. And I would recommend you first that you guys learn how to analyze the support and resistance level. This is pretty much like a swing trade, but like this specific area, this is a different strategy. I have an entry point right here, but this is a whole different strategy. It's not the same one. Why? Because if I actually put the 50 EMA or SMA, you're going to realize that it's literally in the middle of the price of the asset. So it's not telling me that there is an uptrend or a downtrend. It basically just telling me that the price is being consolidated. So I'm not going to enter there. What I'm going to do instead is I'm actually going to look, what I did in this specific scenario was actually look for the support and resistance level on a 12, 1 day and 4 hour charts. So if 4 hour charts, this price gets actually touched, I'm actually going to enter this position. Now I can go the way over here. I don't know if that's actually going to happen or not, but a 4.6 risk reward ratio I think is actually good. That's the trade that I decided to enter. It hasn't been touched yet. Probably, I'm not sure if it's going to be touched, but you shouldn't enter in these consolidated markets. If you notice, this one is a clear uptrend, and this one, it's kind of an uptrend. It's becoming an uptrend. So I found my opportunity in there, but it's not a consolidated market. So if you see that the price is completely consolidated, you don't know what's going on, then you shouldn't enter. If you notice right here, I entered on a change of trending on a sell limit position for a 6.61 risk reward ratio. I'm not sure if that's going to happen. As a matter of fact, I lost a call position here. So we're just waiting for this one to actually go, but you shouldn't enter any consolidated market. Just go ahead and find a really how can I put it, clear uptrend or downtrend, and you're gonna be good to go. Hey, so hopefully you enjoyed the content of this video, and if you did, smash the like button, support this YouTube channel to help with the algorithm of YouTube, and more importantly, if in case you have any questions or comments to share, you can use the comment section below. Thank you very much for watching this video, and I'll see you on the next one.